Well, holy smokes, everyone. We need to talk about right now what Jerome Powell just said, because people, what he is saying right now definitely has some big consequences for the markets, has some big consequences for interest rates, and has some big consequences for inflation. And if he implements what he just said, this market rally could be about to make a big U-turn. So everyone, what did he say? What does this mean for the markets? And what should we do right now? That's exactly what we're going to discuss in today's video. So let's not waste any time. Let's get straight into it. Look at this, everyone. Powell says inflation is much too high, news alert, and the Fed will take necessary steps to address it. I hate to tell you, Jerome Powell, but inflation has been far too high for about 6 to 12 months right now. So you're definitely behind the curve, and you should have done at least minimum half a percentage point rate hike in your last meeting. So Fed Chair Powell vowed to take tough action on inflation, which he said jeopardizes the recovery. Powell said the Fed will continue to hike rates until inflation comes under control and could get even more aggressive than last week's increase, which was the first in more than 3 years. So how could he do that, everyone? Well, he noted that those rate rises could go from the traditional 25 basis points and move to more aggressive 50 basis point increases if necessary. Well, at least he is finally starting to wake up to the inflation crisis that all of us that go to the grocery store or fill up our cars are already seeing. But unfortunately for Powell, it's too little too late. And like I've been warning about the past 6 months, if they leave inflation too high for too long, then they're going to have to do much more rate hikes than if they addressed inflation 6 months ago when it wasn't as bad. And if we look at the markets did have some little bit of a negative reaction to this. The Dow down around 200 points and the Nasdaq down around 0.4%, but still not much of a reaction, because I think what the markets think is Jerome Powell is bluffing. And what central banks can do, or what they try to do, is jawbone the market or forward guidance, try to tell the market what they're going to do. And what Jerome Powell is really trying to do is bring down inflation expectations. Where, for example, right now inflation is high. And so what people are going to do, they're going to start buying things now instead of waiting. And what that does is that's like a self-fulfilling prophecy, and it makes inflation worse because people are hoarding items now because they know prices are going to go up. But if a central bank or a central banker like Jerome Powell can say, look, don't worry, we're going to start hiking interest rates, they're going to get very high and prices are going to come down, then that will hopefully for him bring down inflation and bring down inflation expectations. And some people may think even prices could go down in the future. He also addressed the Russia-Ukraine situation, saying it is adding to supply chain and inflationary pressures. Under normal circumstances, the Fed generally would look through those types of events and not alter policy. However, with the outcome unclear, he said policymakers have to be wary of the situation. In normal times, when employment and inflation are close to our objectives, monetary policy would look through a brief burst of inflation associated with the commodity price shocks. That's definitely what we've been seeing with gas and oil right now. And oil did drop briefly below $100 per barrel, but is now making a comeback and is now back above $116 a barrel. We'll just have a quick look here. Yes, as we can see here, Brent crude is actually now $117 per barrel, up 8.5%. Crude is up 8%. Natural gas is up 2% today. And we look at the year-over-year prices here, everyone. 82% for crude, 80% for Brent, 92% for natural gas, 255% for coal. The Federal Reserve is definitely late to the party here. He said, however, the risk is rising that an extended period of high inflation could push longer-term expectations uncomfortably higher, like I just warned about, which underscores the need for the committee to move expeditiously as I have described. But what I think will have a much bigger effect on the markets is what the Federal Reserve is going to do with their $9 trillion balance sheet. Powell indicated last week that the FOMC also is prepared to begin running off some of their nearly $9 trillion in assets on its balance sheet. He noted the process could begin as soon as May, but no firm decision has been made. Well, if he's talking about inflation is getting out of control, he's really worried about inflation, why isn't he telling us now what he's going to do with his balance sheet? Now, as many people have been speculating that they'll sell $100 billion of assets per month. I think he needs to get very aggressive and start telling the markets and letting investors know what they're going to do, because otherwise, if he doesn't tell us, then it's going to be much worse than people thought. We could see a Federal Reserve rug pull. That is where they, pretty much pull the rug from underneath from investors, and the markets haven't priced in this scenario. And then we see more declines in the markets coming ahead, and we'll definitely see the yields on bonds start rising even higher. because like I've been showing you in previous videos, everyone, the yield curve is now getting close to inverting down at 0.18%. And today, the 10-year US Treasury hit a 3-year high, went to 2.3%. Now, as quickly for my viewers, Moomoo is doing a special promotion this month only. We can get up to 5 free stocks for when you deposit $100 or more. I'll put a link in the description and a pinned comment. Okay, so what you're probably wanting to know is, what does this mean for you and me in simple terms? Well, what this means, like I've been warning about everyone, the markets have already priced in the first 5 to 6 Federal Reserve rate hikes. But a big risk for the markets, and something that could take this rally into a big U-turn, is if the Federal Reserve all of a sudden starts doing 50 basis point rate hikes and they start absolutely dumping their balance sheet, selling $100 billion worth of bonds and mortgage-backed securities every single month and sending yields higher. And again, like I said, it is too little too late. Inflation has already destroyed the middle class. I'm going to the grocery store every week and I'm literally shocked. The prices are literally going up by the day. I haven't seen or experienced this inflation in my lifetime, but I'm sure a lot of my older viewers from the 70s have definitely experienced this. So everyone, like I said in my last video, if the Federal Reserve doesn't get inflation under control, if they don't address it and start getting more aggressive and they let inflation run hot, we could see a possible melt up in the markets, or we could see the market go up or stay flat and not fall in dollar terms, but inflation could erode away your portfolio and your portfolio gains. But what I'm hoping, they will address this inflation crisis, bring it under control. We will have a painful bear market for the stock market, but it'll be much better for the economy overall, for the middle class and the standard of living for the average American, and we can rebuild from a more sustainable base. Now, for all my loyal viewers still watching, you are absolutely awesome. Thanks for watching. I'll see you in the next video.